Hello, this is Cynthia Fick, and this is the August 1st stock market update. So I thought I'd spend a moment talking about the first 7 months of this year and kind of what's been behind the big run up we've had in the stock market. One of the things is that it looks like we very well may have a soft landing that we've been talking about for a while. Truly a Goldilocks economy. It's not too hot and it's not too cold. So that's a really good thing. So even the Federal Reserve last week said that they're no longer modeling for a recession. So that means they're taking each meeting as it comes, and it's very data dependent. And that, again, is a really good thing. What is the soft landing going to look like? The three kind of legs of the stool are, number one, lower inflation. There's a PCE number that came out last week. Was a lot lower than expected last year. Around this time, it was at 7%. This month, it was at 3%. So that's been a big drop in inflation there. Number two, job strength. Non-farm payrolls are down from where they were about a year ago, but unemployment is still at 3.5%, which is pretty darn strong also. The third thing is stabilization of interest rates. This year so far, the 10-year Treasury has been between 3.4 and 4%. It's been pretty stabilized there as compared to last year, where interest rates doubled and tripled. So we've had that, and that has also added to earnings stabilization. Guidance is coming out and is much more confident than it was there for a while. 50% of most of the companies have come out with their earnings, and 82% of them are better than expected. The market is also broadening out. That means more stocks are participating. That's always a good thing. And when you have good profits, earnings guidance is positive. That is just really great for the stock market. So that's what's been happening the last 7 months. One thing I can guarantee you is that the next 5 months may not be as good as the first 7, but it's been really good. So what we need to start thinking about is our long-term view, our long-term goals. Financial Life Planners is in the business of long-term wealth and legacy creation. This is for not only your life, but the legacy, the generations behind you. And that's what we're trying to create for you now. One thing we've talked about is a long-term secular bull market. I told you there were 26, 27-year periods of time where the stock market, the general trend of the market was up, not straight up, and not all stocks went up, but the general trend was up, and I believe we're still in that right now. Now, I'm going to show you something really quick that will also kind of help you not think that some aliens came and told us there was 26-year periods of time. It's not, Stonehenge or something like that, but this is based on something I think you'll find very interesting. And here we go. And that is the 26-year periods of time happen to perfectly coincide with when the baby boomers were in their highest income and expenditure age time frame. So this is prime working years where they're earning a lot and they're spending a lot. And that that baby boomer upswing corresponded with the last 26 years that we had. You know what's happening right now? The millennials, and I said millenniums last week, excuse me. The millennials are hitting that time frame where the majority of them are in that prime working and earning years of 25 to 54. It's not, again, aliens came down and said that this will happen every 26 years. It's based on our population and the population growth. The neat thing about this is showing you exactly how that corresponds with the different 26-year timeframes. In 1982, when the market really, took off there, baby boomers were 18 to 36 years old, and millennials are just entering that time frame now too. So what's going to drive the market for the long run? Baby boomers, millennials, and artificial intelligence. So that's what I have for you today, and I'll be talking to you next week. Bye.